Jeffrey Powell is with me this morning. He is from Polaris, Greystone Financial. He is the Chief Investment Officer and Managing Partner. Good to see you. Thank you so much for joining us.
Good morning.
On a day like this, what do you do first thing when you get to the office? Do you sell or buy weakness?
You can't be panicking in this situation. I think that you've kind of hit on a little bit this morning, kind of the ebb and flow of what we're dealing with right now. I mean, essentially what we're looking at is you've got a huge amount of earnings coming out. Most of the earnings that have come out have actually been very strong. I mean, as of last week, the 17% of the S&P 500 had reported. 80% of those companies had beat expectations. So there were earnings surprises that were going into it. I think that the market right now is very reactionary to what's going on as an overall. I think that there's a little bit of geopolitical being tossed into it. And then when you've got companies like 3M and Caterpillar, yeah, I mean, we're in a rising interest rate environment. Cost of carry just to begin with is more expensive, let alone what you're dealing with the geopolitical trade wars and so on that are happening right now.
One of my best sources out there says that this is a violent cleansing. He's not worried about this, but felt that we really do need to see a cleansing. He's expecting we get past the midterms without major change. Economic numbers continue strongly, and this ends up being a buying opportunity. Do you see it that way?
Absolutely. I mean, I think that we're probably very close to the lows of the market at this point. I think that going into midterm elections, uncertainty is really one of the catalysts for sell-offs. So the concern points, again, from a trade war, when is that going to be resolved? What's going to happen with Congress?
So what do you think about that? Do you think that's another worry for investors? The midterm elections are very consequential because if we were to see a change in leadership in the Congress, that stops the president's agenda, and an agenda that has included economic stimulus.
One of the worst market cycles is having a Republican president and having a split Congress. So, yes, the upcoming election is very important.
That's one of the worst markets when you have that makeup?
Yes, exactly.
Huh.
Yeah, so if you look at it having an agenda where you have an offset of a Republican president and a Democratic-controlled House is actually better than having it split. The reverse, having a Democratic president, which obviously isn't an option in this situation, with a Republican-controlled Congress is actually one of the best markets.
Now, are you saying a Democrat-controlled Congress, meaning they win the majority in the House and the Senate?
Correct.
Okay, but because that's not expected.
It's not expected. So again, there's a small sample size here. About 10% of the time, there's been a Republican president and a split Congress, so Senate or House being opposite of each other. It's a very small sample size. So with that, it's actually the worst of the 6 different options that you can actually have out there of having, Democratic president and the different options and a Republican. So you can have a Republican president, and then you can have, obviously, a Congress that is all Republican. You can have it split, or you can have it all Democratic.
Jeff, are you making any changes to the portfolio as interest rates move higher? Give us your sense of where we are in terms of the 10-year, where it is, the 2-year, looking at 3% there. Does this make you say, you know what, I need to take some money out of equities and put it over in the short end of the curve in fixed income?
Yeah, we're a little concerned about the fixed income market, especially as you already kind of hit on. The long term is really where you're going to see a lot more of the weakness that's going into the overall bond market. Historically speaking, when you had a pullback or having Fed funds rates that are rising, the 10-year historically has lost 8% of its value for every 1% that you've seen an uptick in Fed funds rates. We have not seen that, mostly due to foreign investing in the 10-year and beyond, because of the negative yield that you see in so many places within the world.
Meanwhile, Caterpillar, the stock is down 7% this morning. Its guidance fell short of expectations. The company beat earnings expectations for earnings and revenue, by the way, but the guidance is the issue. So do you worry about overall 2018 on the year, 2019 in particular, 2020 slowing down?
I'm not worried about slowdown. I mean, if you look at what's going on from an economic standpoint, everything looks very, very solid. I think you already hit on the 4.2% GDP growth. We obviously are talking about other stimulus. Wage increases obviously play into lots of different areas of the stock market as well. There are areas of the market, industrials in particular, so Caterpillar, when we're looking at that as a specific stock, those are areas in a rising interest rate environment that tend to be a little bit weaker to begin with, period. So having having Caterpillar miss based upon having trade wars and also a rising interest rate rate environment. That's not out of the ordinary, but there's plenty of places within the stock market that should do quite well, even in a rising interest rate
So where do I
environment.
hide in a market that's selling off 400 points today? Would you stick your neck out and buy anything right here?
You know, I think that I like the adage of you never catch a falling knife. I'd like to see the market settle down a little bit here. I think that it is oversold as we speak right now, so there are opportunities there. I'd like to see it settle down a little bit before I'd be a buyer into this market.
All right, we will leave it there. Good to see you, Jeff.
Good to see you as
Thank you
well.
so much.
Thank you.
We so appreciate you joining us, Jeff Powell.